Hi everyone, welcome to this week's edition of the Money Talk NGX Weekly 8-map review. We drop this breakdown every week and we hope this will give you an overview of your investment portfolio and what's happening in the market. Before we go into the daily numbers, the headline figure was a decline of 0.29% for the week. 3 of the 5 trading days were negative, and then there were two major things that happened in the market. First, HoldCo had 3 consecutive days of almost 10% daily gain. This was a major driver for the financial services sector. We also have Tuesday and Friday both closing positively with strong volumes. This week was missed across board, but it wasn't a collapse in the market. Now let's look at the daily performance of the NGX. We can see that on Monday, the decline started with 0.8% downturn to close at 241,749 points. We believe this was broad profit taking after last week's 6.4% gain, and the heavyweight and some consumer goods led these losses. On Tuesday, we had our first recovery. The market was up 0.46% to 242,870 points to a volume of 634.8 million shares worth 53.3 billion traded on a single session. We had 26 gainers against 22 losers on Tuesday. On Wednesday, unfortunately, the ASI fell again by 0.21% to settle at 242,367. An interesting day because market capitalization on the same day rose by 390 billion while the index was falling. The reason for this was Sterling Financial Holdings listing 13.81 billion new shares on the exchange on that day. The newly listed shares pushed the total market cap up even while the index itself declined. Two different metrics moving in opposite direction on the same session. On Thursday, we had a slight decline of 0.09%, and the ASI closed at 242,146 points. Cement fell 9.9%, dragging the industrial goods index down by 2.85%. The banking sector gained, but not enough to offset the heavyweight industrial losses. On Friday, we had a strong close. The ASI gained 0.54% and closed at 243,462 points. First HoldCo led with another gain of 9.97%. The volume on this day surged by 37.6% to 685.9 million shares traded. The day closed with 34 gainers against 23 losers, and this is a genuine buying conviction to end the week. Now on the top gainers for the week, we already spoke about First HoldCo. They were up 38.66%, and this was a standout performance for the week. To provide context on what could have driven this, First HoldCo completed their private placement in late June, and they added about 1 billion new shares to the exchange. We believe investors who participated in this placement typically came back to reinforce their position in the open market. The stock gained 9.98% on Wednesday, 9.96% on Thursday, and 9.97% to end the week on Friday. 3 consecutive sessions of near 10% gains. The next person is Thomas Wyatt, up 27.16%. If you recall, last week we spoke about their trading suspension being lifted and they were able to submit their delayed financial statement. The initial reaction last week was a sell-off, but apparently this week the story turned with buyers massively going into the stock and drove the stock up over 27%. We also have Fidelity Bank on this list, up 15%. Fidelity has successfully completed its banking recapitalization capital raise, and the stock gaining reflects institutional repositioning to mid-tier stock that have strengthened their equity base. We look forward to seeing what happens this week. We also have Learn Africa up 14.44%. This is one of the most interesting connection in the week. One of the things we'll be talking about on the next in the next two slides is the federal government unveiling the 3.05 billion anti-poverty package. Within this package, Hope Edu component is a 552 million investment targeting 30 million children, 500,000 teachers, and 75,000 public schools. Learn Africa is one of Nigeria's leading educational publishers, and when the government announces this scale of investment in public education infrastructure, the companies that supply books, learning materials, and educational content directly benefit. These are investors looking at the forward demand and taking position early. The last person on the gainers list for today is United Bank for Africa, who gained 10.98%. UBA was one of the highest volume stock all week, and strong transactional volume reflects continued institutional accumulation in the backing names post recapitalization. The UBA's Pan-African footprint with operations across the three countries also positions it uniquely as foreign capital begin to return to Nigeria equity market. And this is following the S&P Global Watch List placement. On the losers list, the top loser here is an interesting one. That's BUA Cement, now 18.99%. We believe BUA Cement is facing a direct competitive threat from HBM Nigeria, formerly Lafarge, which we spoke about last week. And HBM is currently expanding Ashaka plants in Gombe to 2 million metric tons capacity, as well as increasing the capacity of the Shagamu plant to 3.5 million metric tons. When the new capacity comes online, the Nigerian cement market will have significantly more supply. More supply means possible price competition, and this might mean lower margins for the players in this sector where BUA Cement plays. Investors are probably repricing those projected supply and demand metrics. The next person here is Red Star Express, down 18.53%. Red Star Express is a logistic and courier company, and their cost structure is heavily dependent on fuel cost. As we all know, the fuel cost has surged in the last few months following the war between the US, Israel, and Iran. Although Dangote Refinery recently cut petrol prices, the benefit doesn't flow immediately, and we believe that investors are recalibrating near-term margin expectation during this transition period. The third person is a familiar face on this show, International Energy Insurance, down 15.29%. And we won't say much there. It's the same factors, drivers moving the stock down. And unfortunately, the momentum has continued on the negative side. The fourth person here is C&I Leasing, down 13.28%. As a company that operates fleets of assets and they require financing to purchase assets before leasing them out, with CBN's rates as the MPR staying at 26.5%. Their borrowing costs remain high, and their margin between what they earn from leasing the asset out is declining or has continued to compress continuously. The market is probably pricing this pressure on C&I leasing's profitability. The last person on the list is PZ Cousin. We spoke about them last week, and they reported a 388% profit growth in their FY 2026 results. PZ is not a struggling company, but what happened was that the stock ran strongly after the earnings announcement, and investors who bought in before or during the results rally are now taking profit from the name. The business is doing well from the report they declared. The decline is investors' behavior after a strong run, not the business performance. So now let's move on to the big stories for the week. The first thing we're looking at today is the CBN's external reserve crossing $52 billion. If you remember last week, we spoke about it crossing $51 billion. But for this week, we will be focusing on something else, not the gross reserve, but the net FX reserve. which exceeded 40 billion this week. And this is significant because it's a 1,300% increase from when Governor Cardoso took office in 2023, when the FX reserve was just 3 billion. This increase in less than 3 years is significant, and we can see that the CBN continues to drop regulations as they did on July 15th, where they announced that the FX purchase tracker portal must be used by all licensed bureau de change operators to buy foreign exchange through a centralized platform. The goal of this is to reduce parallel market leakage and give the CBN real-time visibility into retail transactions. The next topic here is the Nigerian headline inflation, which came out at 15.91% for June 2026. The inflation rate was released by the NBS on Wednesday, July 15th, down from 15.93% in May, and this is dramatically lower than the 25.29% in June 2025. The decline was primarily driven by core inflation. These are items that exclude food and energy, falling to 15.92% from 16.82% in May. However, on the flip side, we had food inflation actually rising to 17.52% in July from 16.96% in May. While the overall rate is trending down, Nigerian households are still feeling pressure at the market when they go buy groceries, staple food, and everyday spending. But we see that the inflation rate is going in the right direction on the overall basis, and we are not at the point where average family cost of living is getting easier. For investors, moderating inflation supports the case for the CBN to eventually ease the monetary policy, but until we can see that the food inflation is under control, it is quite unlikely that the MPR will move downwards. The next thing was the federal government launching a 3.05 billion World Bank backed anti-poverty package. The HOPE program at 1.5 billion covers primary health for 40 million citizens and educational support for 300 million children across 75,000 schools. We also have the NGX at 1.25 billion to provide farming input and SME credit. We also have Solid at $300 million to support internally displaced persons. This fiscal policy is working alongside the CBN monetary tightening, trying to protect the most vulnerable while the monetary returns continue. On the global side, we see that oil rose to 84.50% per barrel on the Middle East tension. This is good for Nigerian exports, and we can also see on market-wise, the S&P fell by almost 2% on AI valuation reset. Against this backdrop, the NGX decline of 0.29% looks like a genuine outperformance. On the global scale, Nigeria remains the world's best performing stock in dollar terms for 2026, up 67% as confirmed by Bloomberg, who track 99 exchanges globally. Now let's move to the heatmap review, looking at how the market performed for the week ended July 17, 2026. We'll be starting with the financial services sector. And as we can see, we had massive gains across the sector by first HoldCo, UBA, and Fidelity. Others were also green with a very small number declining. If you see, most of those that are red here are those that have gained in the last 2 weeks. We can see that the gainers were quite low on this list, and PZ, NASCON, and Calgary led the losers list for this sector. On the industrial goods sector, spoke about BUA Cement and CAP led the decline for this sector, while other stocks, if you look at other stocks, they didn't move during the week. In the ICT sector, the same story, negative across board with the exception of MTN gaining 2%. Omatech and Champs Holding led the decline for this sector. The oil and gas sector, only two movers, Japo Gold and Owando, both losing during the week. In the services sector, we have a mixed story. We have Red Star, Kevatin, CI Leasing, Unicel, Interlink leading the losers for the week. And we also have Len Africa being one of the top gainers for the week. For construction goods, a mixed the Eldame McCall gained while UPDC declined, which is a reversal of last week's movement. On the healthcare sector, green across board, Fitzin and Maybaker being the only movers for the week. We also have agriculture sector with only livestock and zichis moving, others that didn't move during the week. In the conglomerate sector, we have all positive across board. Utilities, we can see that there was no movement in the utilities. The two stocks on this list, Gerigol and Transpower, closed on a 0% move. On the natural resources, the same story, only one mover, which we've spoken about, Thomas Wyatt. And on the investment, we only have VFD Group on with a 1.42% gain for the week. The key takeaway for the week was that the market is consolidating after historic recovery. The macro backdrop is the strongest it has been in years, and the 0.29 weekly dip reflects profit taking, not any structural weakness. Watch the cement sector carefully in the coming weeks. The HBM Nigerian capacity expansion will keep the Dangote Cement, BUA Cement, and HBM stocks moving in different directions. This is the overview for this week, and if this breakdown has been useful for you, don't forget to subscribe on our YouTube channel. Follow us on all social media platforms: TikTok, Instagram, LinkedIn, Facebook, and X. We believe this information we provide will be helpful for you in building your investment portfolio. Thank you for listening today, and see you next week.